Back to Earth, let's talk money. Business reporter Nicholas Poynton is in the Auckland studio with me this morning. Kia ora iho. Let's start with the markets. What's going on?
Yeah, good morning, Guy. And yes, to Wall Street, all the main indices have recovered slightly. That's after they edged lower following an unexpected rise in weekly jobless claims. The Dow Jones gaining 1.3%, the S&P 500 up 0.1%, and the tech-heavy Nasdaq has risen about 0.5%. Our own top 50 index rose a modest 12 points yesterday to finish at 12,721. The New Zealand dollar is at 69.7 US cents and 94.5 Australian.
And let's talk about what those New Zealand dollars might buy on the property market. The market's cooled a little bit, but how's this look for first home buyers?
Yeah, not too good perhaps. So CoreLogic's latest property market report suggests the market is losing steam, with fewer properties for sale and house price growth slowing. The firm's chief economist Kelvin Davidson says with sales volumes expected to dip in the coming months, we should see some normality return to price growth. However, he says mortgage rates are already rising ahead of the predicted hike to the official cash rate next month, so the barrier to first home buyers will likely get higher.
That will simply, by identity, almost reduce the number of people who can buy because their income's fixed and, their costs are sort of fixed. And, if the bank's testing that affordability on a higher mortgage rate, then it will take some people out. That's always going to be the case when interest rates are going up.
And we'll hear more from Kelvin Davidson later in the hour.
And we've been in this era of record low interest rates, and in fact, the bank's been printing money in simple terms. The Reserve Bank, the central bank, has that finished now?
Yeah, so the curtain has come down on the central bank's large-scale asset program, otherwise known as quantitative easing, or as you put it, just simply money printing. The program saw the RBNZ buy about $57 billion worth of government bonds. That's to keep a lid on interest rates and ensure that there was plenty of liquidity in the economy. However, given the strength of the economic rebound and interest rate rises just over the horizon, the scheme is no longer needed. ASB senior economist Mike Jones says the money printing worked, but perhaps a bit too well.
These are blunt tools. Both the Reserve Bank's tools are blunt. They are one tool for the whole economy, and you would say that parts of the New Zealand economy have come out of COVID a little bit overstimulated, with the housing market being really the clear example of that. But, as always, we have to look at the counterfactual. And so I think if we didn't have the LSAP in place, the New Zealand economy would undoubtedly be in a weaker spot.
And we'll hear more from Mike Jones later in the programme. We'll also take a look at the prospects for a green hydrogen to replace aluminium in Southland. Plus, we'll have all the latest from the money markets.
Thanks very much, Nicholas. Nicholas Poynton there with the business news. It's